Welcome back to the meme update for this week. We will look today, was that the bottom for AMC this week? We will make a little, very interesting update on BYND. Of course, we will talk about GameStop. We will also look if Weber found its bottom this week, and the same for DJT. And for AMC and GME, we will also look again at the combined chart. If you're interested, just stay tuned. As always, I'm using the Fractal Method. I will link the updated tutorial video at the end of this video, or you just search on my channel for the Fractal Method playlist. Okay, well, then jump into AMC. So we will do that today a little bit different. First of all, I make the summarize of everything. Then we'll talk about the micro tracking. Then we look at GME, do there the same. And then we look at something interesting with the combined chart. For AMC, just for the little summarize, AMC is in a megaphone pattern. I said I don't like to touch the lower trend line. We did, but okay, as long as we not massively knife through it, that's still okay. I'm still one of the persons who think we will do a two-part squeeze, just because I'm tracking this one and there was a two-part, and not the small squeezes in 2024 and 2025. If we are doing a two-part, what would be our target for our first part? Well, we just look at 2020. We have this significant trend line here, the same like this trend line here. We broke out of the trend line and retested the trend line again. And if we also take the fib from the bottom to the peak, this was a perfect 618 pullback. If we do the same like now, where we say this was our bottom, where would we go? Well, we don't want to break under this trend line again after this close. So we would go around 120, 130-ish, somewhere in this range, pullback to the 0.618, around $6 to $7, and that would be our retest. After that, we would do this section here. It's just a section between January and June in 2021. But I have to say, this took you 110 days. It's most likely because the fractal is repeating itself and getting slower and bigger. Most likely would take up to 220 days. That means our C would be most likely next year between January and April again. But then we should touch the upper trend line. To say that, if we're doing a one-part squeeze, I won't be angry, okay? And for this, I really like to be wrong, okay? Good. Now we zoom in. So, and here, it's about the title of the video, yeah? The good, the bad, and the ugly. We start with the ugly. The ugly means what I was saying in the last weeks. AMC doesn't like double, triple, quadruple buttons. Every time you see a double button or a triple button, it's just showing you that the next move will be a lower low. Yeah? So for the ugly, could be this double button. This was just a bounce. Next week, we make a new low. Yeah? But I'm kind of saying I don't believe that. Yeah? But for the ugly version, yeah, new low, everything again. Now for the good version. And for the good version, we really, really, really have to zoom in extremely. Yeah? Because if you see this, on the good version would mean that this candle here on Friday in pre-market was a lower low. It was lower 0.001 cent, whatever. If this is true, this was a lower low. So no double bottom. In that case, yeah, this was the V on Friday. Yeah. What we have done till then? Well, on Friday, we did this little higher low, this micro higher low. And the most important thing, we also did the small higher low. Yeah? And especially because I watched it very closely, in the last 5 minutes, we wicked under the 786. And if you watched me in the last weeks, for the finish of the higher low, we need two things. First, we go under the V and the A. Okay, we don't really see that here because it's just one candle. Or we drop under the 786. We did it in the last 5 minutes of the market on Friday. Means, and after hours, we just went sideways. So in the best case, this was the micro higher low. I did a small higher low, finished on Friday. So what would happen next week? First of all, you know me, I want my big high low. We have now a little one, but the little one isn't enough. We still need the higher low. And in my opinion, it's just my opinion, before we do this higher low, we are not squeezing. So for me, next week for the big squeeze is off the table. If we do that, you can come here and call me an idiot. Fine, I would even be happy because we finished. But for my tracking, for the best good version would mean we gap up next week. I agree with that. We gap up to 177, 180. Somewhere in this range, we would reject this trend line. And in the best case, we open on Tuesday on this level, at this level. So this here would be our peak of the higher low, the last higher low we need. And then the rest of the week, we will fall till Friday. To where? Well, we would fall to something around 130. That would be next week. And the following week, the last week of February, we are doing our A, which will reject the 200 EMA, 0.5 pullback, first week of March, ready to go. And as I'm always saying, I'm also okay if we're not doing this. That we just do this next week till Friday, and in the last week of February we gap. That's okay. But I want my higher low. The bad version, that would be the good version for me. The bad version would mean we open on Tuesday still here, where we closed on Friday, and slowly grinding up till Friday to the 180. Why is that the bad version? Just because then this would mean in the last week of February, we're doing the pullback. In the first week of March, we're doing the A. In the second week of March, we're doing the 0.5 pullback, and so on and so on. It would just take more time. That's why the bad version. But as long as this level and this higher low is holding, the bottom is in. If we touch or break 121 again, you know the game, new low, higher low again, and. Now to GameStop. So here also, little summary. We have our low in March, our April 2020. We had our squeeze in 2021 and our pullback till April 2024. This thing was just our A. And from April 2024 till today, this was just our higher low for this A. So our next target is our B for our squeeze. Also, I'm saying, I know there are a lot of price targets, 1,000, 5,000 to 1 million. I am the guy for my price targets is 400 to 500 maximum, just because of this trend line. You can break out a little, like in 2008, but most likely this will be your target. Same like 2020, 2021. How would the squeeze look like? Well, the same what GameStop is always doing. You see a massive candle upside, reject wherever your target is. Same like 2021, same like 2024, Let's look on the 24-hour chart here. Then you will get a massive knife, the same like 2021, 2024. You will go up again, quick, but this time you're doing a lower high. Yeah? Lower high. And then you will start your yearly long pullback. Same like here, same like here. Yeah? I mean, in 2021 till 2024, this took you 4 years. This pullback took you 2 years. So maybe this pullback taking 8 to 10 years, just saying, because the fractal is always getting bigger and slower. And after that, you still get your C. Yeah? And this C can, I think, be over $1,000, but I don't think that anyone is interested in it then anymore. Okay, so let's look, are we finished or not? So, and here also, the good, the bad, and the ugly. The ugly just means one thing, we knife, yeah, to $70-50. Yeah? And this version is still there, and this would really take more time then. Yeah? Don't see that yet, but as an alternative. Now to the good version. You know, when you watched AMC, good version for AMC means AMC gaps up to 180. The good version for GME means, it sounds ridiculous, but the good version for GME means we gap down to 21.36. I will come to that in a second. We gap down on Tuesday to this level, and the rest of the week we are running to our A. Yeah? Where, during the time, AMC is slowly grinding down from 180 to its level. That would be the good version. The bad version would be we open where we closed on Friday and slowly grinding our way down to Friday, to this price target. And then next week, the following week up to our A, the following week down. The same what I showed on AMC. It would take more time if you're not just gapping here and squeeze next week. Yeah? Question is why? Yeah? Why do I think we have to go down here? First of all, just for the tracking for GME, we have our V here in November 2025. We did a small higher low, perfect. And then we went up here. We didn't broke this trend line. If we would have broken this trend line, I'm talking about this trend line here. Yeah. If we would have broken this trend line and went up to here, this could already have been our A. The problem, we didn't do that. We rejected this trend line. We already made our lower high. And I think on Friday, we already did our midpoint. So what is this? Well, this is just the big higher low we need, in my opinion. This is our big higher low. We are under the T, we are under the trend line. This is our big higher low. And where is a higher low most of the time going? It's going to V under A or the 786. Yeah? That's why I think we will go down. Yeah? And in the best way, we're doing it quick. Now to the interesting part about this number. And for this, we have to look at the combined chart of AMC and GME. So here's the combined chart for people who don't know what it is. This is a chart AMC combined with GME. You can do that if you click on TradingView on where you search your stocks and type in AMC plus GME. Yeah? Then you get this. It's just a combination of AMC and GME. And of course, GME is more heavily weighted in this chart because it has the bigger number. Yeah? So if GME is moving, you will quite quick see it in this chart. To that AMC is changing this chart, AMC really has to move much because it's slightly weighted for this. You will see parts of AMC in this and parts of GME. So this is absolutely sure AMC, same like this squeeze is absolutely AMC. This, for example, is absolutely GME. The interesting part is the tracking for this chart is slightly different to AMC and GME. The all-time low was in March or April 2020. Before this close in January 2021, this was a higher low, not a new all-time low, which it should have been. Then we broke out, also made the perfect breakout retest like AMC, to our top down. Also here, it ended in a higher low. Yeah? And then we just did the small micro higher low to this higher low. So for the absolute macro tracking, this here is an old fractal. Yeah? Since March 2020 till April 2024, this was just our big macro higher low. And from April 2024 till today, this was just our micro higher low, the higher low to this higher low. What would come next is just the run to our A. And the run from higher low to A is most of the time the most violent one. So, is this micro higher low finished or not? Let's zoom in. Landmarks wise, we have nothing left. If we just look at this micro higher low, we have here April 2024 as our V. Our top is May 2024. We already did our low high, our midpoint, and our T. And in the best case, we already did our V. Let's look at this here. We already did our V. We already did a small high low. And in exception to GME, for example, we already broke out of the trend line. This here is just our small A. What do I mean with this? This would be our small A, pullback, small B, pullback, small C. And this C is just our big A. If we're doing that, with volume, we can just jump that. But what I want to show is, if this is our small A, you all know, you break out of a wedge, you retest the trend line. If you're doing an A, you're doing a 0.5 or 0.618 pullback. Means we will go down here to maybe 24.33 or 23.64, or just do the breakout retest here. Yeah? The thing is, this price right now, so $25-ish, is the combination of AMC price plus GME price. So the theory, which isn't mine, yeah, a colleague showed me that, but I find it interesting to show. If we combine this, and let's say our tracking for AMC is right at 180, yeah, next week, and this combined chart really has to come down to, let's say, 2360. Yeah? If this combined chart has to go to 2360 and AMC going to 180, then you just take 2360 minus 180 for AMC, and that giving you 2186. And this 2186 would be the price for GME. And that's why, yes, GME, if something is on this combined chart, on this three, it makes absolutely sense. Because our V under A for this higher low for GME is at 2135. So if you have to make plus minus that the combined chart goes a little bit lower, this is the perfect level. That's why I think there's a good chance AMC goes up or gaps up to 180 and GME falls back. Yeah? We will see. It's interesting. It would be nice if something is on this here. But all in all, I really have to say, this looks better and better. We are close. We are close. Okay. Next one is BYND. So also, little summary. BYND was in its top in July 2019. When AMC and GME squoze, it made already its lower high. Then it fell back to its midpoint. After that, it fell back to its T, last time to sell before the V. The T is the important part because the T line is our next target for A. We made our all-time low in October 2025. And then we made this big, massive high low. Whenever this is finished, we should go up to our A, which should be around 15 to 25, and then 0.5 pullback, break or retest of this trend line, and then to our B. As I already said in the last videos, the run to A should be pretty quick. The pullback, if you're repeating something what the higher low has done, could take a while. Okay, let's look what we have done. So here also, because of the title of the video, the good, the bad, and the ugly. The ugly means that this was our M, somewhere here is our T, we will knife, make new all-time low, and it will take time. Don't see that, but that's the ugly. Now to the, let's start with the good one. With the good one means we are finished. Means what we did on Friday was our V, and on Tuesday we just run. Yeah, that's the good one. Yeah, because we are now going into micro tracking on the 30-minute. Yeah, so that just means we are finished. The bad one. The bad one would mean that this little peak on Friday was just our little T. Yeah. And this higher low isn't finished yet. We still have a gap open between 65 and 66 cents. And our V under A is here at 67 cents. And our 7.86 is around 68 cents. Yeah. So for the bad one, that would mean, we could do that in pre-market. Yeah. Doesn't mean that this has to take a full week. But if we fall till Friday in this range, something between 67 and 65 cents. But this would be then the finish of our higher low. Yeah? And then we are ready to go. Yeah? If you're not doing the absolute bearish version, where we knife to everything and we make a new low, no financial advice, but this could be next Tuesday, last week of February, or in the first weeks of March. Yeah, we just have no landmarks left anymore. Yeah, if we're not knifing and doing the ugly version, I would say March, April, we are here on the top. As it's just finished. Let's see. Okay, next one is bull. And for bull, absolutely same. For the summary, bull started its IPO in the higher low, did a massive run to its C, then did a lower high, midpoint T. And also here, the same like BYND, our T line is important because the T line is our next target for our A. So something over $10. The time frame I gave bull was between, what was it, February 4th to February 17th. I know I said this would be nice if this would have been our A, yeah? But now we know more. This time frame was just the V and the higher low, yeah? And it could be finished now. But here again, the good, the bad, and the ugly. Ugly means we knife from here, make a new all-time low, and we have to start over again. And I couldn't even tell you where the all-time low would be, because down here is nothing. Now to the good. Good version would mean, let's zoom in. We did our V on Thursday, February 5, the day where everything knifed. And since then, we're doing this higher low. The point is, if we're taking our fib, last Thursday was on February 12th, we went under the 0.786. That means this higher low could be already finished. Then we did a micro higher low and went. And the thing is, if you make this little trend line here, this is also already a breakout retest. And if we're taking our fibs for this, from the low to this is a 0.618. So for the good part, this is our little a. Means this was the lowest point for the near future for bull. Means next week, why ever, our next target is a. Yeah, something over 10. Before we go to the even absolutely insane version, the bad would mean that this is just a micro higher low, this one, and we still, and not a, and we still, that this higher low isn't finished yet. Yeah? That this a here was just our T, and we have to go down here. Yeah, you see, you have still here a gap between 570 and 579, and that would mean next week we do this. Yeah, I mean that's only what, that's 5%. Yeah, we do this and then we go. Now to the insane version. The thing is, if you're doing Weber with the rules one by one, well, then you will do this. You will finish down here, you will break upside, you do your A, do your 0.5 pullback, go up to your B, which is around 20-ish, do your 0.5 pullback, and then you squeeze, go to C. Yeah. The thing is, we never saw an A and a B in Weber. I mean the big A and B. We never saw that, except the IPO, which were just 2 candles. So normally I would say, yeah, just A, 0.5 pullback B, and so on and so on. If we're just repeating something like the IPO, we're getting into absolutely stupid territory. But I can't rule that out. I just can't. Yeah. Let's see. It looks nice. Okay. Last one, DJT. So last little summary for DJT. Also, DJT started its IPO in the higher low. Same like Weber. Same like Weber, it just ran to its C. Then it did a massive lower high, a massive M, a massive T. And for the bullish tracking, our V was on November 2025. So we until then we're just doing the higher low. Here also the bad, the good, and the ugly. For the ugly, this means nothing. This was just T. We knife down, make new all-time low. It will take time, and it would be shit. Yeah, that's the ugly version. The good version. It depends now what you want. Yeah, I don't know if you would say the good version is the bad version or something like that. I will just show both. The thing is, we did a little micro higher low, and as it looks like, we did a small higher low. Still, both of these are not big enough for this big T, big M, big L. It's not big enough. We need a big macro higher low to finish this. So before we go into this micro tracking here, what do I mean? We have 2 versions of the macro higher low which would come. First version, in my opinion, would be the bad version. Yeah? Would just mean we have here our trend line. We don't care that the T is shorter, and our macro higher low has to reject this trend line. That would mean it would look something like this. Yeah, you won't go over $37-ish, pull back, then you get your big run to your ABC. That is for me the bad version, just because it will take more time to get to the big moves. For me, the good version is my additional rule I presented in the last update video, where when your T is too short to reach the trend line, you're getting a new trend line, which is only connecting between your M and your T, and your next macro high low isn't allowed to break this trend line. This would look then like this. Yeah. And for me, that's only the good version, because this Your maximum price for your peak is 24, and this would take shorter time. You get quicker to your big moves. So you have to decide which one you like more as a good or bad version. Now the same like I said for Weber. Question in the stock is, if we are finished with this higher low, are we doing an A pullback, B pullback, C, or are we really repeating what it has done in its IPO, just up? Yeah. Thing is, we already saw many times what DJT is doing after its higher lows. Yeah, higher low finished, massive run. 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 So also here, I can't give you the answer if we have to do this one by one, where we do A 0.5 pullback, B 0.5 pullback, or if you're not just doing something stupid and just go up. Yeah, I can't answer that yet. Yeah. So now to the micro tracking. So overall, our V was here in November 2025. We did a micro higher low. After the micro low was finished, merger news and upside. For the previous tracking, this was our A. Yeah. Problem right now is I don't think so. Just because, first of all, we didn't went over T, and second, we rejected this trend line, and we went way too low. So in this case, this here is just our small higher low. Yeah, means this C here was the peak of our small higher low. This was already our M, and this on Thursday was just our T in the best case. We also fell under the 786. So in the best case, this was our V. This higher low is finished. Whatever happens over the weekend, whatever Trump is tweeting or whatever, next week is a massive breakout. Or this shitty thing is waiting on something. Yeah, because we are really doing micro tracking on the 1 hour 30 minute already. Yeah, I mean, we could also say if we still need some landmarks, yeah, we can only find landmarks on the micro tracking now. That means if this is our V, we maybe, just to get more time, need a micro higher low now, which would mean we have to go down to 1081. That's 0.20 cents. And go there. Yeah. There's no landmarks left. This thing is just finished. If you not knife and make a new low, any day now. Yeah. But again, this would just be the last macro high low, whatever it is, version 1 or version 2. Yeah. But this thing looks fucking finished. Let's see. Okay. As always, if you liked it, leave a like. All the other stocks, I will make an update video this weekend, most likely on Monday. Yeah, there's no stock market. Yeah, so I try to make it Sunday or Monday, but it will come. The explanation video will be here, playlist here. And if you want to see more, you can give an abo. See ya. Nice weekend.